The biggest bust in the history of the world is coming up. It's pensions. They trusted the government. They trusted their pension would be there, and it's going to go bust. And that's us. We get crushed.
Guys, have you seen the $85 trillion that's been missing? Well, in today's video, I'm going to explain how important that is and how this can affect your pension fund. Guys, stay tuned. Welcome back to the channel, guys. If you're new to the channel, I'm Credit Coach Q, and I create the first cloud-based software that allows you to put your credit repair experience into your own hands. If you're new to the channel, I'm super excited because I have a banger. In today's video, we're going to talk about this $85 trillion that's been missing. But before we get into the video, guys, please like and subscribe to the channel. It allows YouTube to push this within a wider audience, and it also allows YouTube to push this within the algorithm and allows us to leave these lights on. Guys, please like and subscribe to the channel. If you have anything derogatory in your credit report, I mean anything negative, charge-offs, late payments, bankruptcies, medical bills, guys, you name it, please go over to mycreditapproved.com. It's the website and the software that I was telling you about that allows you to put the full experience to your own hands. Guys, people are removing thousands of dollars worth of debt by themselves. They are no longer using credit repair companies. They are putting this information and this experience into their own hands and appreciating on a deeper level. Guys, please go to mycreditapproved.com, check out the software and start removing these items, guys, if you have anything derogatory on your credit report. Now, let's dive straight into the meat and potatoes of this video. Now, guys, this is going to be interesting. Now, a lot of individuals over the course of months have been talking about a recession that's going to hit. I've talked about it. Some of my colleagues on YouTube have talked about it, and it has been a lot of speculation of why that is, especially because of inflation and the interest rates. Now, we have a totally different catastrophic event that can possibly affect the global economy in all of its markets. I think that this is something definitely needs to be looked into and taken serious. Now, the $85 trillion is actually being reported by the BIS, which is the Bank of International Settlements. And the BIS is basically saying that FS swaps are over leveraged and they are not being reported properly. Now, to give you some context on the BIS, the Bank of International Settlements is basically a bank, it's a central bank within your central bank. So whatever your central bank is in the world, you have a very high percentage of your bank reporting to the Bank of International Settlements. Now, the BIS is basically saying that this can start a new global financial scare for this particular market. Now, what you have to understand is that the global GDP is around $90 trillion. This is being reported as $85 trillion. Now, if you add this with the FTX scandal and you add this with a lot of other scenarios that's going forward, next year sounds pretty scary. And I'm going to explain why. Now, this $85 trillion that's being reported is kind of confusing, so to speak, because I have two articles. I have an article with Forbes talking about it, and they only saying that $65 trillion of the economy, $65 trillion poses a challenge as expert worry that could trigger the next market collapse. And then we go over to US News, and they say FX swap debt at 80 trillion blind spot, BIS says. Now, both of these are two different numbers, but both of them are very substantial, and it also are coming from the same exact markets. Now, the FX market is the foreign exchange market. Now, the foreign exchange market is basically global currencies, how global currencies work and the markets of those global currencies. Now, there is a market for each individual currency and how it fluctuates in value. Now, there is euros, you have the yen, there's the dollar, there's the British pound, and all of that is on a market similar to the stock market, and they go up in value every single day, and a lot of people trade on that market. Now, they are saying that other institutions that's non-banks, which is pension funds and other non-bank financial firms, have more than 80 trillion of hitting off balance sheet debt and FX swap swaps. Now, FX swaps in a layman term is basically a country swapping its debt with another country and giving them an IOU, so to speak. That's the easiest way I can explain what an FX swap is. Now, a lot of these countries is basically over leveraging themselves with this debt. Now, over the course of the last couple of years, the inflation has risen at such a high value where it's basically putting us at a very uncomfortable position, because now in 2023 this debt needs to be accounted for, and if it doesn't, it can start a ripple effect in a lot of major markets, especially when it comes to pension funds. Now, when I see pension funds, guys, I instantly have hair growing on my neck, because this is some scary stuff. A lot of people have depend on their pension funds and have their retirement accounts and their longevity in these accounts, and they depended on the government. Like Robert Kiyosaki said, Robert Kiyosaki basically said that the government is not going to do well with these pension funds, and when these markets collapse, the pension funds that's attached to them will collapse as well, and that can raise a lot of alarm for individuals all over the world when it comes to their longevity and their practice of retirement. So yeah, guys, this is very interesting. I think that the only way of being able to fix this or caveat this is basically distributed ledger technology. Now, distributed ledger technology, DLT, is basically technology that moves fast. Now, one of the biggest issues that we have in our global economic market is that things takes a while to settle. So if you do want to move money around, yes, you can do it. You can make the transaction fast, but the settlement time is days ahead. Like I say all the time, if you want to send money over to California, the fastest way to do it is not Cash App. The fastest way to do it, to send $1 million to California, is to get $1 million in cash, get on a plane, and send it there in 6 hours. That's the fastest way to move money, whereas it's actually going to settle the transaction. Even if you want to dispute a transaction with your bank, you can't settle it instantly. You have to wait until the transaction settles, which can take days, and it's trillions of dollars that's always being stagnant because it's waiting to reach its other party to settle. And this is causing a lot of friction and a lot of stagnation in the global economic markets. And this is also putting a lot of other markets that play the risky game in a very over leveraged position. And I think that this is going to be one of the biggest depressions in human history going forward. 2023 is going to be very interesting. I think that a lot of people need to start taking these warnings and these articles seriously and put themselves in the position of not trusting the bank, keeping some cash on hand, having multiple banks, and basically saving as much as possible. This is not a time to go shopping for frivolous items and frivolous luxuries. You don't want to add no more liabilities on your balance sheet going forward into 2023. Guys, let me know in the comments how you feel about this. Do you think that this is going to be something to actually really take serious, or do you think that this will pan itself out like the markets usually do? Guys, I'm really interested in your comments, but until next time, take care of yourself and take care of your credit. Credit Coach Q out.